How to catch up on retirement savings in your 50s. Think it's too late to build a solid retirement in your 50s? Think again. The game is far from over. How to catch up on retirement savings in your 50s. By Shelley Gigante. Shelley Gigante specializes in personal finance issues. Her work has appeared in a variety of publications and news websites. If you are nearing retirement and have fallen short of your savings goal, it's not too late to play catch-up with your finances. In fact, the federal government wants to help. So it allows people to make additional retirement contributions in their later years. Let's break it down. What are catch-up contributions? The Internal Revenue Service allows individuals who are age 50 or older by the end of the calendar year to make extra pre-tax contributions to their work-sponsored retirement plan accounts, including their 401k, 403b, salary reduction, Simplified Employee Pension Plan, or Governmental 457b, for tax year 2024. The tax return you file in April 2025. The catch-up contribution limit is $7,500 on top of the $23,000 pre-tax limit for all savers. The catch-up allowance for those ages 50 and older in tax year 2025 remains $7,500, but the contribution limit for all retirement savers climbs to $23,500. Beginning on January 1st, 2025, the catch-up limit is even higher for older workers. A new provision under SECURE. Act 2.0 will enable those ages 60 to 63 to make annual catch-up contributions of up to $11,250 to a workplace plan. Catch-up contributions also exist for IRAs. In tax year 2024 and 2025, those 50 and older may save an additional $1,000 to their traditional or Roth IRA, above and beyond the baseline $7,000 annual limit for all eligible workers. The catch-up contribution limit remains $1,000 in both 2024 and 2025. Simple IRA, or simple 401k, plans permit catch-up contributions up to $3,500 in tax years 2024 and 2025, on top of the limit for younger workers. But in some cases, changes made in SECURE 2.0 may allow individuals to contribute up to $3,850 to certain applicable simple retirement accounts. And finally, employees with at least 15 years of service may be eligible to make additional contributions to their 403b plan beyond the regular catch-up for those ages 50 and older. Also known as a tax-sheltered annuity, TSA plan, a 403b is a retirement plan for some employees of public schools, employees of certain tax-exempt organizations, and certain ministers. So how can you use these tools to your advantage? Catch-up contributions are one of the most attractive means of saving for retirement, said Melissa Labant, Director of Tax Policy and Advocacy for the American Institute of CPAs in Washington, D.C. I don't think most people are aware it exists. Indeed, a 2020 survey by Vanguard found that 98% of employers offer catch-up contributions in their 401k plans, but only 15% of eligible employees take advantage. Employers that sponsor 401k plans are not required to offer catch-up contributions, but a majority of them do. A few $1,000s in annual pre-tax retirement savings may not sound like much, but it has the potential to accumulate quickly with the magic of compounded growth, said Labant. That can help to mitigate longevity risk, a serious threat to many baby boomers. According to a recent Bankrate survey, 55% of Americans said their retirement savings are falling short, with nearly 35% indicating that they're significantly behind, and another 20% reporting that they're somewhat behind on their financial goals. The survey also found that age is strongly correlated with how Americans feel about their retirement readiness, with pre-retirees and current retirees self-reporting that they are the most behind on their savings. Gen Z, about 31% said they're ahead, while 30% said they're behind. Millennials, about 19% said they're ahead, while 46% said they're behind. Gen X, just 9% said they're ahead, while 65% said they're behind. baby boomers. Only 7% said they're ahead, while 71% said they're behind. Let's run the numbers. Here's how it adds up. It's never too late to start saving, said Labant. For example, a 50-year-old earning $75,000 per year with no prior retirement savings could potentially boost their future 401k balance from $735,000 to $981,000, an increase of $245,000, by making catch-up contributions until their full retirement age at 67. That assumes they achieve a 7% average annual return and continue to max out their 401k until they retire. Their account balance would be even higher if they take advantage of the new, higher catch-up contribution limit for those ages 60, 61, 62, and 63, which again is $11,250 for those who participate in a 401k, 403b, Salary Reduction Simplified Employee Pension Plan, or Governmental 457b. Catch-up contributions yield another potential benefit as well, said Labant. They lower your taxable income in the year you contribute, which may render you eligible for deductions that were phased out at the higher income threshold, she said. Deferring that income could be advantageous because you are most likely in a higher tax bracket while working than when you retire, said Labant. Worried about where to find the extra cash? There may be hope. Those nearing retirement are often in their peak earnings years and may have fewer demands on their income. Their kids are finishing college, and their mortgage may be paid. They may also be able to pay down debt and reduce their monthly spending to help stretch their retirement savings. By saving a bigger piece of their income pie in the years leading up to retirement, those age 50 and older can help make up for lost time. To further ensure a comfortable retirement, they may also wish to delay Social Security when they reach retirement age to boost their future financial benefit. Save as much as you can as early as you can, but if you haven't saved enough, don't forgo this opportunity, said Labant. Check with your employer to see if they allow catch-up contributions, and if so, take advantage. Since 1851, MassMutual has been focused on helping people secure their future and protect the ones they love. That purpose is why we have thousands of financial professionals to assist you on your journey through insurance, investing, retirement planning, estate management, and more. You can find a MassMutual professional with this tool, or you can let us know you'd like to talk to one, and we'll have one of our financial professionals contact you. Discover more from MassMutual. Is it okay to retire with a mortgage? Tips to help maximize your retirement income. Need advice? Contact us.